Very good morning, friends. I am Nalakshi Swami, welcoming to my channel Smart Index Edge. Let us calmly understand what Nifty has been doing over the entire month. You can see, if you observe carefully, Nifty has not been trending. Instead, it has been playing a hopping game, gap up, gap fill, gap down, gap fill, again and again. What it tells? This clearly tells one thing: there is no directional commitment from the big money. Just they are making retailers to hop up, hop down. That's it. Monthly structure going nowhere. If you see the monthly structure, it had from here, February 3rd, it has not gone anywhere. February 3rd, the close was around 25,066, and if you consider today's close, 25,454. It has not gone anywhere. Just 400 points we are seeing. Throughout this month, Nifty has gapped up, failed to hold higher levels, filled the gap down, and again retraced back. This is a classic distribution and balance phase, not a trending market. When markets behave like this, option buyers suffer the most and only level based traders survive. Important reference levels. Now, let us come to the important levels marked on the chart. 25,873, this level acted as strong rejection zone. Here, let me mark this. This is a strong rejection zone. Violent move from here. Price tried to go about it but could not sustain. Tried what it did, it gapped down, and the price movement, it was a very hard movement from 1 to 3 days, and 3 days of effort was lost in within no way. So swiftly, market has come down. And if you observe the candles over here, you can see a single candle fall around 700 points and single candle fall almost equal to 500 points. Today also 500 points. 25,752 and 25,637, the entire area act as a rotational zone, not a breakout area. It has rotated there, just played the game and made the retailers to play the game. 25,543, this is a key acceptance level. This level, 25,543, it is a key acceptance level we need to watch. And once price stopped below this, selling pressure increased. Selling pressure increased to 25,423. 25,543 below this, market started coming down. This is very, very important support. Today price came straight down and tested this level sharply. And yesterday's move was clean selling leg. Notice the candle carefully. This was not random selling. This fall was fast. The candle was wide range. There was no attempt to bounce midway. This shows initiative selling, not profit booking. The fall of nearly 375 to 388 points uh, happened because price failed at higher levels. Acceptance happened below value and stops were triggered one after the other. What this tells us, when Nifty behaves like this, no follow through on upside, sharp sell offs after small rallies, repeated gap filling, it clearly tells us market is in balance, not volatility is expanding. This is not a buy and hold environment. This is a sell and rise or level to level market. What should a trader do now? In such markets, do not chase breakouts. Do not blindly buy on green candles. Trade only at levels. Let price come to you. Patience is the real edge here. You have to wait very patiently for the levels. Do not chase the breakouts. Nifty, final thought is Nifty is not weak, neither it is strong. Nifty is confused. Nifty is confused. When the market is confused, only clarity of levels and discipline can protect your capital. The final advice is trade light, trade planned, and let the market show direction before committing big money. So, friends, this is what happened in the on the Nifty throughout this month. Month is going to complete now. February month is going to complete. Almost we are near the expiry. Expire next week. Today is Friday, and expiry week is next week. So, what do you expect? It can it can spend its time rotating only. No trend on the market. It is useless to trade the Nifty when such type of environment is there. Better you select few stocks, at least few stocks you can trade on the few stocks. At least some stocks are doing directional movement, you can capture that movement. That is what we can do here. See, if I show you everything, let me show you step by step. See, the market gapped up for the news of the trade deal or Trump deal. We can call it as a Trump deal, and gapped up only to sell off. After sell off, see, from this level, it came down. It didn't go anywhere. Halfway through, it came down 4 days, 4 days, and the fifth day gapped up. So, gapped up, you can see what sort of candles are formed. They are all tiny, tiny candles from here, from the gap up at 25,800 to 26,000. It's just hardly 200 points it has spent 2 days. And then a small gap down, followed by big gap down, and this gap was filled 1, 2, 3. 3 days of hard work, this was the gap. If you follow the path, it was a gap, same thing it is doing, gap down and filling the gaps. It is just like a what game? I don't remember that hopping game. Actually, we used to play when we were young. That's what it is doing. The market is doing. It came down exactly. It was 25,375, and yesterday's level was 25,388, finally closed around 25,000. 454. But still, this gap has not filled. Let me enable my indicator. Just I will put market memory POC. I'll hide all the things. Market memory POC. Let me enable only monthly POC and uh, yearly POC. If I enable monthly POC and yearly POC, this is the market, this is the strong support, what I see over here. 24,982. From there, market got accepted and moved higher, came down and got accepted, and it is trading near the high. And this yellow line coming down is the pivot, monthly pivot. Let me change the color so that you can see it properly. Monthly pivot. Which color shall I put? Let me put green. Let me make it dark. And let me enable yearly pivot also. Yearly pivot is yellow. Let me make it dark. This is yearly pivot and this is monthly pivot. The market was down below the monthly pivot. What a game it is. It was actually, it was a fake. It was a ghost trade. Made the illusion created in the market. And finally, market is confirmedly closed. That is close. Here it tested and moved higher. It is confirmedly closed below the monthly. And the next level of point of control, this is yearly point of control, is around 25,272. 25,272. This is the level. See, level-based trading is advised. When it comes to that level, you may get an opportunity as a option trader. You may get an opportunity for some sort of pullback or reversal trades. So important level to watch is 25,000, 722 to 25,000 to 25,252. Because from this level, the market has broken down and gapped up. This is the manipulative level. The market may come to this level and some sort of rotation pullback. Pullback to the monthly pivot can happen. The price is trading below the monthly pivot. It was below the monthly pivot on December 3rd, and a ghost trading happened on the Nifty throughout the month, and finally it is back to the pavilion. Back to the pavilion, let us see whether it tests and restarts the game again. So if we go back and see, this is the yearly pivot. That's why from the yearly pivot, market bounced off. So we are seeing all these levels on this market. Let me change it to daily or weekly so that you can see the entire picture. Let me reset the chart. This is the yearly pivot. Market has gapped up and see how it has come down. Weekly candle, how it has come down. Let me take out this. So it has lost balance. And one more level, you can see exactly 25,261 to 25,250. This may be the zone of rotational movement again in the market. Some sort of wait for that level patiently and you can trade better. Whether it comes today or comes any day, wait for that level. Don't trade in between. Thank you very much, friends. Nalnakshi Swami signing off.